So, Pat, tell us why people should put their trust in the Federal Reserve. So, Patrick, tell us why people should put their trust in the Federal Reserve System.
You can trust them to not do the right thing.
Okay, so why then is a better alternative, in your opinion, for people to secure their wealth to do it through precious metals?
Well, in 6,000 years of history of gold and silver being used as money, they have never failed. You've had currencies come and go, but an ounce of gold, an ounce of silver are still worth an ounce of gold, an ounce of silver, and have purchasing power.
So how are central banks using gold and silver now if they're not using it to actually stamp money?
In theory, in classic times, central banks held gold reserves or sometimes silver reserves with the idea that that would back their outstanding paper currency. That's not the modern day practice. So as far as I can see right now, the gold reserves are being used to manipulate the price of gold and silver to help pretend that paper currencies are of more value than they really deserve.
Well, we've seen, 2015, I think, is the third straight year of declines in gold. Silver's also been down year to year. Why do you think people are still clamoring for the precious metal when it hasn't actually returned a profit in a few years?
Actually, in 2015, in 7 of the 10 largest gold-producing nations, the price of gold did go up. It did not go up in the U.S. dollar. That's true. But if you look in the case of Mexico or Canada, our neighbors, the price of gold rose over the course of the year in the local currency. Again, it's the example that it cannot go to a value of zero.
So what effect does the paper market have on the physical spot price of metals?
The predominant form of gold trading in the world is in paper contracts in London and in New York. The Shanghai Gold Exchange is an exchange where if you buy a contract, you're getting physical metal. It's much smaller, but it's growing rapidly. And from what I can see, the Chinese government is trying to expand the capabilities of that exchange, and I wouldn't be surprised within a few years to see that become the world's dominant market and in effect make physical gold trading the dominant feature of the price of gold.
I mean, how secure is paper trading in metals? I mean, is that in essence a fiat version of the metal if there's more of that issue than physical assets to back it on?
That started out as a convenience factor. Most people would like to invest in gold don't want the hassle of physically handling the merchandise or to personally make storage arrangements, which costs a lot more than it does if you have inventory in the COMEX bonded warehouse, for instance. So being able to trade a paper contract is a lot more convenient. You can have a closer buy-sell spread than having to physically move some gold. But there are parts of the world, and China is one of them, where people don't believe in paper contracts for a valuable commodity.
Okay, last question for you, Pat. If you wanted to be a silver stacker or a gold stacker, what is the cheapest and most effective and safest way to get the most metal for your gold?
In effect, that's a question of, at the current gold-silver ratio, what is the better value? I definitely prefer silver. I would want some of both because I'm not guaranteed to be accurate, but I am heavily in favor of silver.
So what kind of silver or gold would you buy?
Physical metals. I would look for highly liquid forms that trade close to the metal value. For instance, I would prefer just privately manufactured 1 ounce, 10 ounce, 100 ounce silver ingots versus buying the Royal Canadian Mint Maple Leaf, the Silver Eagle dollar, and comparable coins that sell at a higher premium above the metal value.
Would say this is actually Seleucus Nicator himself. It's debatable since there are no real true images. There is a likeness